Julia Borston here with us at One Market. Still, we love having you here.
It's great to be here.
A lot of enthusiasm from Reed Hastings yesterday, and it's such a market departure from the last few quarters.
You definitely hear a shift after they lost so many subscribers in the first.
And it has been kind of amazing how quickly they've built and are getting ready to launch this ad model. But is it too soon to sort of call victory?
Too soon to call victory on the ad model. But what's really so interesting here is that Netflix did return to subscriber growth, but it's also trying to change what types of metrics is judged on as it gets ready to launch that ad-supported service. So Netflix added far more subscribers than expected in Q3, 2.4 million compared to the 1 million expected. And it forecasts the addition of 4.5 million subscribers in Q4. That's 500,000 more than analysts anticipated. Co-CEO Ted Sarandos saying that they are optimistic about their potential to grow even in the face of headwinds.
We have a lot of work to do to continue to reaccelerate revenue. We're really happy with our levels of engagement, the number of hit series and films that we're able to put to our members at prices that they think are a phenomenal value in these strained economic times. And we're growing. Even in those strained economic times and with the extraordinary levels of competition out there.
Going forward, Netflix says it does not want to be judged based on its subscriber numbers and that they won't be giving a subscriber guidance going forward. Rather, they want to be judged on top-line revenue as the company starts to benefit from advertising as well as fees from paid sharing. Netflix saying its growth is being driven right now by its non-English programming as well as original films, plus their innovative marketing driving what Netflix says is higher engagement than any other streamer, 7.6% of TV time in the U.S. J.P. Morgan upgrading the stock today, saying, quote, we have increased conviction in Netflix's ability to accelerate revenue growth with the help of advertising and monetization of account sharing, expand operating margins, and increase free cash flow. Now, while there is a lot of attention on this ad-supported service that Netflix will start to roll out on November 1st, the expectation is that advertising revenue will ramp very slowly. Guys?
Julia, I've heard some people talk about these Stranger Things experiences that they've had in some major cities, almost like a mini theme park experience. So I wonder, are they counting that as marketing? Are they talking about exactly what that does for them? And, you know, how much attention should investors pay to the subscriber, the big subscriber surprise, right as management is saying, don't pay attention to subs, pay attention to revenue?
Well, I think going forward, they know that sub growth is going to be slower, but also that each subscriber is going to have a very different type of value in different markets. So we have seen the majority of the growth come from outside North America, which is obviously a much more saturated market. But as for those Stranger Things experiences, not only are they doing those experiences, they're also investing more in consumer products. I'm sure they'll be marketing those more ahead of the holiday season. And what's so interesting is that really is marketing. Having people go and do these experiences and then post about them on Instagram is incredibly valuable marketing. But down the road, they do see more opportunity to turn them in to really standalone revenue streams. How big they become, I don't think they're ever going to be the size of a Disney themed parks business, but they could end up bolstering the business in other ways.
There is a Stranger Things experience here, by the way, in San Francisco. Julia, if you want to.
Have you tried it?
No, I'm a little scared of it, but it does exist. Yeah. Maybe it's a test case.